Hey, what's up guys? Hopefully you're having a great day today. In this video, I'm gonna go over the top 5 stocks that you guys have recommended to me through Instagram. So really excited. This is gonna be all on Robinhood, and I'll do all my analysis through the Robinhood app on my phone. So hopefully you guys enjoy this one and you get some value from it. I'm gonna go into the top stocks I see value in for this upcoming week of August. We're in the second week and really excited. Hopefully you guys are too. And let's get right into it. So, just to pull up my screen right here, again, we're on the Robinhood app, and that's what I invest on. If you guys want to learn how to invest on Robinhood in depth and get a good understanding for this every single day, I do a live session with a group called Stockmate. You can check out that first link in the description. But without further ado, let's get right into it. So, first things first, the first stock that we have recommended is NKTR. And that is Nectar, if I'm not mistaken. So let's take a look. We got NKTR. Okay, wow. So very high volume. You can see today it's down 29%, okay? They had a significant drop due to what seems to be earnings. And you can see that, it's earnings, not so good. So this one, as of right now, seems to be on the downtrend. You can see that stocks that you invest in should be something that's showing signs of growth. And what I see right here is a stock that has seen rapid manipulation up to almost $100, has very high volume, and we can see that overall, looking at its overall direction, there's no indication that it's going to go up. So I really appreciate the call out. That was Jacob, but I'm not going to invest in this one simply because it doesn't meet my criteria of being a consistent uptrend. So let's get into the next one. I mean, I could look at this, but when it comes down to its overall direction, it's not at something we find attractive, and there's no indication that it's confirmed that it's going to go up. I like to look for that reversal. So let's get right into the next one, which is going to be LUV. So this is Southwest, if I'm not mistaken. Okay, so Southwest is a company. Obviously, they do airlines. They are very prominently known as a affordable airline service in the United States, and they don't do international. But let's take a look. Okay, so overall we can see it's very consistent in this uptrend on the 5-year. Looking at the 1 year, you can see that there's a pretty solid support around what seems to be around $48. $48 here, $48 here as well. And this support is something that we like to look at. We don't want to invest in something that's showing signs of not consistency. So we want to make sure that it has that consistent support, that we're buying near it. So overall, that looks good. Looking at the 3-month, that margin for profit would be about 8%, okay? Conservatively, it would be about 5%, but on the 1 year, obviously there is that potential for it to go up to where it was previously back in September of 2018. But, overall, I would look to buy once I get more confirmation that it's going to go up. Right now, it seems like, it's getting support. We see this, push up after it finding support here. But now a little consolidation. The past week only about 1.2%. Okay, so a horizontal pattern from left to right. When it comes to the 3 stages of a reversal, you want to look for that sell-off, which is the first stage, the consolidation, and then the third stage being that confirmation of a reversal. So we'll have to see. I'm going to keep a close eye on this one. Thank you for the call out. You can see 21 analyst ratings, 38% buy. Okay, 52% hold, and buy rating. Southwest enjoys the strongest brand in the industry thanks to its simple, fair prices, free checked bags, solid customer service. Okay, I think that's pretty apparent. Southwest and other airlines will continue to bid away their profits, resulting in falling yields. So, different airlines competing against each other are always looking to improve their overall pricing structure so that consumers, are reluctant to switch airlines. So they're going to have to adjust their prices because there's competitors that come along. And that's something that you look for. Not too much of an economic moat whatsoever. And then uncertainty high. So overall, like, it looks like it's a pretty good, good deal right now, but not necessarily a good buy. I'd want to see more confirmation. Probably a break above $50.70 would give me more indication that's going to continue up to these previous highs. That resistance of around 54.20. Yeah, we can see there's a resistance around 54 right here as well. So, that would be something we look for. And that again, that margin for profit would be about 8% margin for profit. Okay. So really good call out. I would want to wait for more confirmation. That's the really thing. You can see that, it is finding support, which is good at this previous place where it has repetition of bouncing. And you can see that it is, starting to push up. But overall, I want to see more confirmation. Okay. The next one that we're going to go over is PHM buy. All right. So PHM, I actually haven't heard of this one. This is a recommendation, for a buy. Fairly volatile, as you can see on the 3-month. On the 1 year, seems to be at actually like near an all-time high or a 52-week high. So, guys, you want to make sure that you're paying attention that the risk is not as great as the potential for profit. Right now, looking at this right now, does it seem like that risk is less than the potential for profit? Probably not, right? Probably not, because you can see that, being at an all-time high, 52 weeks, it would make sense that it might sell off right now, right? It might sell off simply because we can see that it has repetition of gain rejected right here around 32.50. It got rejected around 32.50 there, and here previously. And we can see that, on the 5-year even, it's really apparent that we've seen it push up, get rejected, sell off, make a recovery now, and then it's at that resistance that it was previously at, okay? Of course, if it broke above this, that previous support or resistance could act as support, but there's no, it hasn't done that. There hasn't been a breakout, and it's kind of showing signs of this recent consolidation the past 3 months in this volatility. That it may reverse and continue back down, similar to how it did here, right? So for that one, based on the technicals, not too good. Let's take a look at the news. You can see edited transcript of PHM earnings conference call. Okay, so they just came out with earnings. Let's see how they did. Just slightly exceeded the expected EPS with the actual EPS here in Q2 of 2019. When it comes to the overall earnings, consistently at or above with the actual EPS in comparatively to the expected EPS. So that looks good. Economic moat, none. Stewardship, standard. Don't know too much about this company, but when it comes to the technicals, not something I'd be too interested in right now. Okay, so guys, you want to look for something that has, more potential for profit. I appreciate the call out. Great to look at, but just like gauging the amount of risk involved, right? This downside, as opposed to the upside based on previous patterns, it may make sense why this may not be a great buy. Okay. So I'm not going to spend too much time on that one, guys. I think we could get a better one to look at. Let's take a look at our next recommendation, LPX buy call. Okay, so LPX Louisiana Pacific. You can see that there's today it was down 0.883%, and then overall the past week must have had an earnings call that acted as a catalyst in it decreasing in price, and you can see that it's consolidating the past week. But overall, okay, so looking more into this 3-month, it has this, it was up to highs of around 22.50, okay, and it's at 20, or it's up to highs of around 26.60, and it's at 22.78. Okay, so looking at that, for a call, what was the call? $26 call. It may be a good investment if you wait for more confirmation, because this reversal is not indicated that it's going to continue up like it has in the past. But I really like its overall direction. You can see on the 5-year there's a very consistent uptrending pattern that we saw where it was making higher highs, right? Higher highs, right? Higher highs, and then higher lows, as you can see here, before getting rejected back in September, and now recovering. And then, yeah, so $26 call would essentially mean that it would make it back to up around here, okay? And looking at that potential for profit with where it is right now, being at $22.78 and getting to $26, which would be the call, that would be, yeah, a pretty nice, about 10%, yeah, about 10%, no, 14% margin for profit, right? So that's something I find attractive. Let's take a look at the news. This one looks good. Overall, you want to look for something that has, it's at a support, obviously, being at 22.50. We can see right here, hit a low of 22.72. It's at 22.78. So being at a support it's previously bounced at, it may make sense why it might continue up. Does that mean it's going to? No. A stock has a greater potential to continue in the direction it's going than to reverse. But with that being said, it seems like there's more margin for profit than potential for risk looking at the overall direction of LPX. Okay, so let's take a look at the news real quick, guys. We can see 11 analyst ratings, 64% buy, 27% hold, 9% sell. Okay, so 64% buy is something I find attractive. Of course, you don't want to rely solely on the analyst ratings, right? You want to take into consideration, what it is that they are saying, like a 64% buy, and why, the reasoning behind, which we can see is the buy rating. The reasoning behind it is the structural panel demand is set to increase substantially as U.S. housing demand recovers. With the housing market being where it's at, it really does kind of mimic that we had that pullback in our overall market, and now we see it start to recover, and that doesn't mean that there's not more for it to get. The buy rating looks good. It seems like overall the direction would be something I find attractive, and with a break above around $24, right? This previous resistance here that we see, there's a high there, there's a high there. And there's some consolidation here as well as support, and then also resistance here. So there's a line right here of support and resistance, and for it to break above that, we've seen when it does, it can continue up, reaching a margin for profit that would be desirable. And looking at the overall direction, very consistent. That would be one that I would definitely potentially want to invest in. I'd wait for a little more confirmation, like I said, probably break above around $24. Like this resistance right here would be something I'd find attractive. So great call out. Thank you for that one. And the next one, let's see, we have Delta for a buy put. Okay, this is going to be the last one, and then we'll have a little message and then we'll be on our way. When it comes to Delta Airlines, they've had a lot of success. So to have a buy put would mean to essentially do an option, right? We go trade options and we think it's going down, right? So we do a put, and that would be maybe August 23rd, depending on what time period we think it would reach that price of $55, okay? So $55 call. Looking at where it's at right now, you can see it's overextended, right? It's overbought, being at a price point at which it's been rejected previously. It would make sense that it may get rejected this time, at that price point of around $59. Right now, we saw it pull back and then now kind of starting to push up a little more, and we may see it continue up. But with that being said, you want to make sure that if you are doing a buy put, that you have good indication that it's going to continue down. So right now, it actually is at a peak, as we can see. What I would want to look for is a break below, right? A break below around 57.82, because that is the previous support that it's established. A break below that, previous support is going to act as resistance. So if we see it break below the support, then it could act as a resistance for it to start a downtrend. And that's something that I would find attractive for a buy put. $55 put. How long would that take? Well, let's see. Last time it was at $55 was back in, that was in June 11th or June 12th. So for it to reach the price it's currently at, which is $59, that took roughly about 1 month. Okay, so that'd be a 1 month put. I'm assuming there wasn't a actual date established for the expiration date, but if we went trade options, essentially how we do that, 1 month from now would be around September 6th, and then we would do a buy put, and we would look for a $55 put. Okay, so and that's not too bad. It would be I think around $48, and that would be something that you may want to look at. When it comes to Delta, there's definitely a lot of upside with the airline, but I would want to look for a little more. It seems like it's overextended, it seems overbought, but I would want to see it continue down a little more and go for that option of a buy put. That would not be a bad trade. Like I said, I'd want to see it break below this previous support here, and once it did, I'd look for a buy put right there around 57.82. So hopefully that makes sense, guys. Hopefully you got some value from this one. I'm actually in Santa Barbara right now, so I'm not able to have my normal setup at home, but I thought it was really important that I go over these top stocks that I see value in for this upcoming week in the second week of August. So hopefully that makes sense, guys. Hopefully you got some value from this. I really appreciate you guys watching. Thanks for the support, and I'll see you guys in the next video.